So why are we cutting interest rates? I am not sure. Why are we cutting interest rates? If the GDP is better than expected, economy is growing faster than expected, inflation is kind of flat to cooling off, let's say. Why are we cutting interest rates? Is it because unemployment's kicking up? Potentially. So there is a saying on Wall Street, right? Don't fight the Fed when they're cutting the rates. However, again, breaking news: last September, Fed cut the rates by 50 basis points. Okay. Since then, the 20-year note, the 30-year note, which are the mortgages and car loans are based on, not car loans, but mortgages are based on, have gone up 100 basis points. The mortgages are still at 6.5%. Why are they not going down? Because the Fed has no control over what the mortgages do or what car loans do. They just don't have any control over that. What the Fed can do is they can regulate or lower the short-term rates, interest rates, the short end of the curve. On the long end of the curve, the market's so big, Fed cannot do anything about it. In fact, since the Fed has cut the rates, mortgage rates have gone up, actually. So the bond market is not buying what the Fed is selling. Just not, period. And how do you figure that out? Well, you can go look at a chart of TLT, an inverse 20-year note indicator. Literally, TLT has gone down in price. If it's gone down in price, that means interest rates are ticking up. Since the Fed cut the rates, the 20-year note has ticked up by about 25 basis points. So the Fed can only regulate the short-term interest rates, the bills, maybe up to 1-year note, 2-year notes. The rest is up to the interest rate gods, and the market's not feeling it. So the Fed said they're going to cut rates 2 more times this year. We'll see. But I don't think it's making any difference. I don't think it's going to make any difference to the long end of the curve. Short end of the curve, yeah, maybe it will. But yeah, I mean, all assets, all, with the exception of crypto, which may be on their way. I don't know. Gold, new all-time high. Stock market, new all-time high. Why are we cutting rates? I don't know. Now, at the same time, I would like all of you to go check something called M2. There's a global M2, that's the money supply, global M2, and there is the M2 in the US. Go check it out. Go look at the chart. I mean, we all have Google, Gemini, Grok, whatever we have now. Go Google it. Look at that chart. M2 has exponentially grown, obviously, we know. It has actually started really to accelerate, to grow with the GFC in 2008, okay? Because we had major trouble. Fed came and saved the economy, and it happened again during COVID, right? M2 has exploded globally. And there is a direct, in my opinion, again, there is a direct correlation between what happens to money supply and what happens to these assets, such as gold, such as stocks, such as real estate, such as crypto. Go look at it. Go superimpose those charts on top of each other. You'll see. So M2 is still growing. In fact, it made a new high yesterday. So that means, what does that mean? In layman's terms, means there is so much more money in circulation. That means we're just printing so much more money, not physically printing, but we're adding zeros to the ledger and we're putting it into the economy. Well, as long as that M2 money supply growth goes from the lower left to the upper right, stocks with a little correction here and there, gold, real estate, crypto is going to do the same thing. And that's when we can close the wealth gap. How do we do that? The rich have figured this out a long time ago. What do? They buy hard assets. Let it be stocks, let it be gold, let it be silver, let it be whatever it is. Because when that M2 is growing, that means there's more dollars going into the supply of dollars. More of something means dollar value is shrinking, dollar value is going down. That's when you are losing your buying power. So far this year, dollar has gone down against a basket of currencies by 11%. The government may tell you that inflation is only 2%. I go, BS to that. Gaslight all you want. I'm not buying it. But ask the regular average American, average consumer, they have lost 11% of their buying power this year. Over the last 5 years, at least 5, 6, 7% per year. But at the same time, what has the market done over the last 5 years? Almost up 100%, well, 70%, whatever. So basically, by investing in assets or hard assets, not only you're keeping pace with this devaluation, debasing of the currency, but you're getting ahead. You're going ahead. Why are housing prices so high? It's because there's too many dollars chasing too few goods, and that's what happens. Why are stock prices at an all-time high after all-time high? It's because of the print and spend. Why is crypto there? Why is gold there? Why? Because there's so much money, and that money has to do something. It has to chase some sort of return, and it comes in, and it's put to work. Now, at some point, these musical chairs will end because that M2 growth doesn't come for free. What happens? You all heard of the 38 to be 38 trillion, and I think in another 40 days, the national debt, that also keeps going up. That the trajectory of the debt and the trajectory of the M2 growth is practically identical, because all we do is we're taking 5 trillion as income as the U.S. Treasury, and we spend 7.5. So every year we tack on $2.5 trillion onto the national debt. Now, how do we get out of this? The Trump administration tried to do what was that? With Elon, they tried to do something, right? But it didn't work out. But they have different ideas. They want to grow the economy faster. They want to grow the GDP faster, because according to all the signals that, I mean, look, these are not short-term signals, obviously, but if you look at the Case-Shiller Index, we are literally getting to the dot-com bubble levels between stocks and what then indexes. If you look at the Warren Buffett's index, which is total GDP, total stock valuation divided by total GDP. Our GDP is about 28 to 29 trillion dollars. Total stock valuation is about 75 trillion. That the mean for that is about 120. We're at 222%. That's like flashing red warning signs, right? But again, the musical chairs will continue. We will keep printing. We will keep spending. All asset classes will move higher with a little glitch here and there. That's why I created the website. All these things are going to be in there. You guys may not be getting the correct news. The correct news is don't slave harder, save in hard assets. And I'm going to try to, inform and educate you all with the new website,